Morning, Steve Freed in Chicago with the morning grain comments. Grains are a little bit easier today. I think that there has been some producer selling, which is weighing on the corn and soybean market. And also the Black Sea wheat prices are lower, which is weighing on the wheat market. Outside markets are all higher. We continue to have optimism that there could be a China-U.S. trade deal. We'll see what kind of comes out of the talks that should be finishing soon in China. There is talk that the Chinese delegation may come to Washington next week. And there's also some talk that in March the two presidents may meet. Again, the President of the United States said he wouldn't really meet the President of China unless they're going to sign a deal. The numbers that are possibly coming out as far as grains are concerned is around $40 billion China would buy of U.S. goods on an annual basis. It includes soybeans, corn, DDGs, wheat, ethanol, sorghum, dairy products, and meats. And so that would be a real big shot in the arm for U.S. agriculture if that is true. The data for China soybean imports in January, they were up to 7.4 million tons, which is year to date is 13% above a year ago. USDA is talking about a 6% decline. So again, the imports picked up in January, but still running behind a year ago. January trade data, their exports were up 9%, imports were down 1.5%. Their exports were 217 billion, imports 178 billion. So some people are hoping that that could be a sign that their economy is stabilizing. Today we've got export sales, wheat probably somewhere around 700,000 tons. Last week was 500. Beans, 6 to 1 million tons. Last week was 1 million tons. And wheat sales maybe 2 to 500 versus 593. Brazil weather still looks good for crops. Argentina still mostly dry. The Argentinians came out and said their soybean crop should be 52 million tons, up from 50 million tons in their previous estimate, and the USDA is at 55. So again, we're in a trading range, and we need something to break out of that range. Certainly the deal, a trade deal would do that. Might be a good chance to see corn and wheat break out on the upside of its trading range. I don't know how long they will continue at that higher price, with 2019 production looking to be better or higher than it was last year. On the bean market, still a lot of bears in the beans because of the fundamentals in record global and U.S. stocks. A rally may be short-lived because I think China's already bought what they think they need from U.S. for this marketing year, with the South American harvesting approaching pretty quickly. So again, when we look at some of the people that are willing to take a stab at what futures are going to be in the fall, some people think that beans will be at the 820 area on November. We're at 956. That Chicago wheat will be at 480. We're at 542 on the December. And that corn will be at 380, and we're at $4 on the December. So there's a lot could happen in the next few weeks if there is a deal. Might want to take advantage of it, especially if the corn market and wheat market rallies. The rallies could be short-lived, and everyone's saying, assuming we have normal 2019 world weather, that eventually prices will go lower. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.